Hi, welcome to Sunday TTR. This is Alexis, and let's just jump into what happened on the Friday. So Friday we had some of the big news that came up. Mainly was because of the speech that Fed Chair Powell gave. So if you look at the headlines over here on Forex Factory calendar, Fed Chair Powell pivots to cutting mode. Previously, he was on the stance of not wanting to cut interest rates, but then in the end, he said, okay, maybe he might cut interest rates. So I think I mentioned it before. Donald Trump wants him to cut interest rates, and Donald Trump usually get what he wants by bullying, by pressure, you know. And it isn't a huge surprise that Fed Chair Powell actually caved to say, okay, there might possibly be a cut in the interest rate. So what has happened is, I think there was a huge move on the Friday itself. If you look at just the Nasdaq on the daily time frame, you can't quite see much, but if you look at the hourly time frame, you see huge green candle over here in reaction to the news. And then on some of the currency pairs as well, on the dollar pairs especially, we also see, big moves reaction, a big move reaction to the potential cut of the interest rates, a knee-jerk reaction, but the move probably lasts an hour and then it petered out because it was a Friday night as well. So where is the US dollar heading to in the next couple of weeks? The question mark is, will interest rates really be cut, or is this just kind of noise to sometimes the government, I feel, puts noise in kind of get certain reactions out of the market. And when we look at that, let's just look at the Fed Watch on the CME Group data. So currently, the latest 17th September reading, which is just next month, there's a 75% probability of a rate cut. The project cut will be the interest rate will cut about 0.25 to 0.5%. We'll see where. Of course, if the interest rate cuts by 0.5%, then the reaction might be a bit more, a bit more exaggerated. 29 October, again, you can see the majority of probability is still on the interest in cutting. So 35% to 51%, if you add these two together, but 80% probability that the Fed will continue to push interest rates lower all the way to December. So this is the December. You also have about 80 over percent. Uh, okay, 25 plus 46 plus 24. So that's almost like still a 80 plus, almost 90% the interest rates will be cut from its current positions today. So this is one reason why there was a huge move on Friday where people are starting to change their projection on where interest rates will go. So according to trading economics as well, some of the headlines, the Dow surged to record highs, drops after the keynote Powell speech, and it's really interesting in how it affects the US dollar. So what I'm really interested in is, again, let's go back to the dollar sink. See, how did it affect our dollar sink? Now, previously we were looking for dollar sink with conservative longs, right, towards at least a 1.3, but with just one day, it took up all your days of meandering towards upside. Price has plummeted all the way to 1.28. And the question is, will the Singapore dollar continue to strengthen over here in light of the weaker US dollar? So if we look at the MAS has kept its monetary settings unchanged since the July 2025 review. So it says there's no prevailing rate of appreciation for the SGD nominal effective exchange rate. So they are trying to reduce intervention. MAS tone is less dovish, so its emphasis is being a bit more data dependent. So it might, if it does do any easing, it will require clearer economic weakness. So there is a very limited forward guidance on this. So the SGD still remains pretty resilient. It's hovering consistently at the top of its policy band. The overvaluation is supported as well by very robust macro fundamentals. So there's a lot of optimism for SGD, linking to this improved global risk sentiment, de-escalation in trade tension, and Singapore is still hitting SGD near record high, in the last couple of months. So it does show continuous strength. So with the weakness in the USD and improving economic growth in SGD, there is a good probability that the SGD will continue to slowly meander towards the upside. Okay, so which means dollar sink, I do actually prefer to hold dollar sink long positions, but with a weak dollar and a potentially stronger sink, I think it's very cautious right now. So I would like to see how the MES reacts to its policies on a strong SGD, because if SGD is too strong, it's not super fantastic for the tourism sector, for certain sectors, because Singapore is really deemed the most expensive country in the world. But if we go to the weekly time frame, all right, when we go to the weekly time frame, we are not at its lowest point yet. I think there's still probability, opportunity for the dollar sink to drop all the way to 1.26 level 1, 1.24 level 2, and then we will see where it goes from there. At this moment, price looks very bearish, not just on the fundamental side, but also on the technical side. The only, I would say, shining light is maybe the dollar sink would not depreciate, or would not drop too fast if the government just slowly intervenes. So I do believe that good buy areas are at 1.27 for a good opportunity, but don't buy at the first touch. Get the confirmation first before we buy. And with that, right, we also need to see whether there is any renewed news on the US front. Now, when we look at the US dollar, the US dollar figures are still pretty decent, right? It has one of the highest interest rates, even if it cuts from 0.4 to 4 or even 4.25, it's still holding one of the slightly more robust interest rate levels. Inflation is still below 3, heading towards 2. We don't know, but it's meandering between 2 to 3. So I think it's still pretty decent. Jobless rate pretty controlled as well. GDP is still doing pretty okay compared to the previous economies over there. So if you compare across the board the economies, the US dollar does still have some leg to go. Now it just needs to let the tariffs settle down, and then we move forward and see where else can we go from there. So that's the dollar sink. So for now, I think dollar sink is just a wait and watch. We're going to see where it goes to. Dollar yen, you can see also, although the daily time frame gives you that big push towards the downside, there's a little bit of support over here. So I want to see whether or not dollar yen breaks this level. If dollar yen breaks this level, then I would take the potential interest rate cut as a bit more priced in. Overall, we still want to see the comparison of where would investors rather put their money, which stocks are still in flavor. And at this point, right, with the global economy still a little bit soft, all right, with certain sectors on a slow recovery, the US dollar still looks pretty okay for now. So this is why I'm still cautiously long on the dollar, but not for now. It's really more for, in weeks to months. We just really want to see in comparison with the other economies whether the dollar will stabilize or not. But again, Donald Trump wants a weaker dollar. That is why I'm also very hesitant to just jump into the dollar right now. So I suspect dollar will range. It will range bound to a certain extent over the next couple of months, all right, while everything kind of works out. Now, currencies that are on the softer side would be the Kiwi. Economy is not doing too well. So the Kiwi is a little bit soft. And I think the Aussie has a little bit of leg room. So previously I was looking at Aussie Swiss. All right, Aussie Swiss. I was trying to see whether there's opportunity to buy it. But what I don't like about Aussie Swiss right now is that price has kind of broken its previous low support level over here, finding a bit of support. But I do suspect this is more of a break and retest situation we might see. So if price breaks below this area, then I think it might meander towards the 0.5 level before we find more buyers to wait. So I do like all these Swiss for a long, but I think we just need to be patient, because even on a technical perspective, the candles here are really, really bearish, very, very, I would say, ugly candle. Now the Aussie Swiss sentiment is kind of like neutral to bearish. All right, the technicals are saying sell. The fundamentals are not the best. But if I look at China, right, China, I think, is doing something to kind of boost its economy. So I think one eye on China. The moment China starts to slowly recover, I think there is leg room for the Aussie Swiss. All right, so this is where I'm looking, because at the end of the day, the Royal Bank of Australia has maintained a relatively hawkish stance. It's kept its interest rate high, right? Its interest rate is still high at I think it's 4.35, if I'm not wrong. Interest rates is at about 4.35. Over here, dropped all the way to, it dropped all the way to 3.6. Not too startly. 3.6 is this. Yep, correct. So it came from a 4.35 in January, 2 interest rate cuts all the way to 3.6. Let's see whether this interest rate works. So they still want it to be a little bit of a hawkish position. And we will want to see whether or not who eases the policies more aggressively. So if the Bank of Switzerland eases more aggressively and the RBA maintaining the rates at 3.6% over here, then we might have a small opportunity of an Aussie Swiss long. So I do want to see also what are the Swiss government doing on their front. All right. So at the moment, the Swiss very flat. Interest rate is almost at zero. So the carry trade will still favor Aussie in a way. Inflation is very flat. So we'll call this a very like cold, stable economy in the sense, but I don't really like the Swiss GDP at 0.1. It's really not the best at this point. So there is still weakness coming in the Swiss, but I think Swiss is just in flavor because of the risk in the market right now. So Swiss is a very popular risk of currency. With the risk in the market, I think this is why Swiss has so much attention. It has been on a up for a very long period of time. Now, if you look at the dollar Swiss as well, no surprise there. Dollar Swiss is almost very similar to how all this looks like, almost at the bottom of its entire range. If you go to monthly time frame, not quite the lowest ever. The lowest ever was at 2011, I think just after the financial crisis in 2008. But price looks like it's hitting over there. So again, potential buys at this area, but I do see a little bit more downside first because of the weaker dollar over here. So what I'm thinking, I would kind of avoid the dollar pairs in terms of buy and hold. So for a fundamental point of view, if I'm looking for stuff to buy and hold, the dollar pairs are not the favorite at the moment because of its unpredictableness and because of the volatility. So I am looking for non-dollar pairs, which is, for one example, the Aussie Swiss is one of them. The dollar Sing is one, but dollar Sing we have to wait very carefully for it to hit a level that I would want it to go to. Now, another currency that we can actually look at is the Kiwi Yen. Now, the Kiwi Yen on a monthly time frame, you can see it is struggling against this resistance line over here. On a weekly time frame, trading just under the $88 mark. All right, so what I'm looking for the Kiwi Yen, because the Kiwi still is a little bit soft. And I know the Japanese government is trying to bolster its economy, so I do think Kiwi Yen has potentials for further short side as well. So this is what I'm looking at for the Kiwi Yen, adding it to what I'm looking at for the next period of time. Now, Kiwi Yen, some of your brokers have positive swaps on the short. I would recommend buy and hold. But if you don't have positive swaps on the short side, then I would just say trade it when the strategy sets up. Okay, so when I buy and hold, it's only if swap direction is in my favor, then it's a little bit more of a comfortable holding point. But if the swap is negative, then I would rather just trade the technicals and exit the positions at the various supply resistance levels. So that's how I would approach the three currency pairs that I'm looking at today. So that's all for me this week, and I'll see you guys the next sharing. Cheers, everyone. Bye bye.